What's up everybody, welcome back to another video. Last week I said that Bitcoin was very likely going to pump after hitting this range low over here, and yeah, you have indeed started going up. Now Bitcoin isn't even the star of the show, even though we might have caught the bottom on Bitcoin, but it's the altcoins that's really outperforming the entire markets at the moment, because if you look at just any random altcoin at the moment, you will be up either 25% up to 50% from the lows. And if you followed the advice that I talked about in the last video, where I simply mentioned that I was following my system, that's all. And my system said that the market was very likely going to go up from that point, given that the entire crypto market was down anywhere between 50, 60 up to 70% from the recent high, then it made a lot of sense considering that we're still in a bull market. And by the way, I'm just going to drop a very shameless plug here. If you guys want to get access to my step-by-step systems that I use to trade the crypto markets and make a lot of money doing so, that you can simply copy and paste and apply it into your own trading immediately, feel free to join the AOC Alpha group that you can find using a link in the description box below. You'll get access to those systems, amongst other things, and all in all, we help you remove the guesswork out of making money in crypto during this bull run. But anyways, back to the video. So if you guys didn't make any money throughout this entire pump here, there is something severely wrong with the approach that you are taking to crypto. And you'll be surprised to find out that a lot of this problem has not much to do with the technical side of things, but rather the psychological side of things. And I'll tell you what I mean. This is the most common trend that I'm seeing across most beginners at the moment in the markets. When the market was down all the way here, they were afraid to buy because Bitcoin hasn't went through any kind of significant retracement yet. And there are also some people that say, oh, you know, just because it's the halving doesn't mean it's going to pump. That is true, by the way. Oh, there's this other factor and there's this other factor. There's this variable. There's variable A, B, C, D, E. But here's the moral of the story. As a trader, you are going to come face to face with a bunch of different variables at every point in the markets. It doesn't matter if you're in a bull run or if you're in a bear market. At every given point, you will have 50 different things that you will need to consider and filter through and make a decision based on your analysis. Right now, it's the same. Sure, Bitcoin could be in some kind of M formation. Bitcoin could perhaps be in some kind of Elliott wave. Sure, Bitcoin could even be in some kind of Wyckoff theory formation. Whatever it is, sure, Bitcoin could still go down. And it's true, Bitcoin didn't see much of a retracement from the all-time high, and it hasn't really seen much of a retracement all the way down from about 25k. Fair enough. But at some point, considering all these factors is just going to hold you back. Because guess what? When you're considering 50 different factors at the same time, and you're too afraid to pull the trigger, even when the market is 70% down, you're just going to miss out on some generational dip buying opportunities. At some point, too much becomes too much, and you simply go through paralysis by analysis. So before I talk about what I think the market's going to do next, let me talk about these psychological problems for a little bit and help you overcome them. Because truth be told, you don't need more technical information. What you need is to work on your psychology. In fact, a lot of people really love the saying that trading is 80 to 90% psychology, and yet we spend 80 to 90% of our time working on anything other than our psychology. Perhaps that's the reason why you haven't been able to get the results that you're looking for. Now, first things first, let's talk about how lowering your IQ inside a bull market actually helps you to win. And I think the best way to explain this is simply to pull up this picture. On the left-hand side of the curve, you have people that are really low IQ. They just see some coin pumping, they just see some narrative catching hold, and then they buy. And then you have the right side of the curve, where you have incredibly high IQ, but even with your high IQ, you realize that a rational analysis of irrational processes is only bound to fail. And then you have the 90% of people inside the mid curve, where they're analyzing every little thing in the crypto market. They're not pulling the trigger when they should be. They're analyzing, deciding that, okay, the price is up 500% from the lows and hence is expensive, just to see that coin continue to do another 10x. These are the people that you do not want to be. Now, being on the right side of the bell curve is really hard because, well, obviously you need to have a really high IQ, either that or you need to have been through the markets multiple cycles. And if that's you, then great, you're on the right side of the curve. I don't think you need to hear it from me what you should be doing because you've already understood the patterns of how bull markets play out. The easier thing to do for most people is to just go on the left hand side of the curve, which is to lower your IQ. Don't think about it too much. When the market is down 50 to 70% on a retracement, that's the time that you need to be buying. Even if it were to go down from that point down to say 80 to 90%, it doesn't matter. We're in a bull market. Ultimately, bull markets go up, and if you buy, let's say, on a 50% retracement, just to get to your previous high, down 50% means you will be looking at a minimum of 2x, all right? And so that's when you need to realize that you just got to turn your brain off. prices are good, you're in a dip. In fact, during the last bull market, this kind of major dip actually happened around 8 times in total, where Bitcoin went through a retracement of more than 30%. And when Bitcoin goes down by 30%, altcoins tend to go down between 50 to 70%. And each and every time the market goes through some kind of a retracement of that magnitude, guess what? It always goes up by a factor of like 5x to 10x every single run. Crypto bull markets is literally the easiest money-making opportunity in the world. All you have to do is to not overcomplicate it and just make the decisions when you should be making them. Which leads me on to part 2 of this psychological equation. A lot of you at the moment have missed the bottom, and that's fine. You do not need to catch bottoms and tops in order to make money in a bull market or in any market in general. In fact, one of my favorite sayings in all of trading is top pickers and bottom pickers tend to end up being cotton pickers, because it's just not something that's sustainable. You never want to try to catch tops, just like how you never want to try to catch falling knives by trying to time the bottom. So what do you do in this case then? Since you've missed the bottom already and price seems to have pumped quite a significant margin from the lows already, what do you do? Well, there are a couple of solutions. Firstly, keep the big picture in mind. Where do you think Bitcoin's going to be in about 6 months? By most estimates, most people would not disagree if I said Bitcoin would very likely be sitting at about $100,000 per Bitcoin if the bull market were to continue. So long story short, we're expecting the markets to continue going up in the big picture, right? At least in the next 6 to 12 months. Even if Bitcoin doesn't hit 100K, we're expecting crypto as a whole to be going up. So if you expect the market to go up, would it be reasonable to say that after this 50 to 70% dip, and just to show you what I mean, by the way, I'm just going to pull up a random chart, draw it from the top, and that's a 55% retracement. Now, would it be reasonable for me to say that if I was expecting the bull market to continue for another 6 months, that it would at least recover this previous high? It would make sense, right? And at this current point, it would be around 2x worth of gains, which in this case is 122% if you were to have caught the bottom. Now, recovering these highs is just the start. Would it also be reasonable for me to say that price is going to continue to expand, right? To form new highs, to form new all-time highs even? It would make a lot of sense. And even for a large cap coin such as AVAX, it would not be unreasonable. At least my target, like a conservative target, would be for AVAX to be sitting at about $100 a coin. Now, assuming that this is my long-term target, would it make sense for me to buy at any given point until this target is hit? Yes. See, the thing about crypto bull markets, in fact, in any market, that you need to realize is that there is no such thing as quote-unquote being too late. There is no such thing as an expensive market. Sure, you could say that relative to the bottom, when AVAX was still trading at under $10 per token, that current price of AVAX is expensive. But in relation to our future predicted value of AVAX, $40 is cheap compared to $100. The thing about any markets that you need to understand, and this will change the psychological game for you, is that there is only uptrend and there is downtrend. Obviously, when the market's in a downtrend, you don't really want to be buying. But if the market's already in an uptrend, all you have to do, direction's already predetermined for you. All you have to do is buy. If the market's in a downtrend, all you have to do is sell, because, well, the direction's already predetermined. Anybody that tried to buy at any point during this dump here would have done pretty terribly, right? Unless you had a really good idea of which prices to buy, in which case I did. I had 4 levels where I was going to buy AVAX, and it turns out these 4 levels were pretty damn good prices. Which, by the way, if you want to get access to exactly where I'm buying which coins at, the AOC Alpha group is going to be the place to be. But I digress. The moral of the story here, that you are going to benefit much more if you simply think of the markets as in uptrends and downtrends. And if the market's in an uptrend, you buy. If the market's in a downtrend, you sell. It's as simple as that. Now, but AOC, the price is already so high. Like, doesn't that mean that there's bound to be some kind of a pullback? Well, yeah, that could be. But it's not our job as traders to predict what the market's going to do. In fact, it's quite the opposite. As traders, in fact, the best traders that I know, including as well as just from experience after doing this for 4.5 years, is that the best traders simply read and react. We're not trying to predict what the market's going to do next. I'm not trying to think if Bitcoin's going to dump from here on out. That's just going to add extra variables into my already complicated trading situation. Like, the market's complicated enough as it is. I don't need more variables to think about. I just need to figure out if right now the conditions in the markets match my entry criteria or exit criteria in my trading system. And as long as it matches and it ticks the boxes, I simply execute based on my trading system. That's how good trading's supposed to look like. Now, going back to what I was talking about before, when you have the big picture in mind, notice how price at the moment at $40 is such a long way away from $100, for example. Then it's as simple as buying high, right? Buying quote unquote high and selling higher. This is how you play a bull market, by the way. It really hurts you if you try to overanalyze everything and try to determine what is the best fair value price for every single token, and you're going to just miss out on a lot of moves doing so. For people that have been through the last cycle, especially if you were one of the beginners that have been through the last cycle and got absolutely wrecked, think back to the behavior that actually caused you to be wrecked. Would you have been better served simply buying something high and then selling it higher, just following the trend and just buy because in a bull run, prices just go up? Or did your approach back then actually serve you well and you perhaps just came into the markets a bit late? Chances are you were one of those people overanalyzing into everything, saying that, for example, Dogecoin at 10 cents is unsustainable just to see it go up to 70 cents. Or perhaps you were one of those people that said the price of AXS is not sustainable at $10 just to see it go up to $190. Again, in the bull market, prices go up exponentially just because of how much money flows into crypto during a bull run. We're not even at the exponential levels of a bull run yet. Like, the masses has not yet came back. By the way, YouTube metrics, social media metrics, in fact, even the money metrics all suggest that the masses have not came back yet. We are still early in this bull market. If you make plays right now, you are still considered early. You can position yourself well before the masses come back, and when they do, well, let's just say you're going to be glad that you bought here instead of up here. Now sure, even when price is up here, and even though there is only a $20 gap, or let's say a 20 to 25% gap between where price is and where you expect price to be, this is still going to be a good opportunity to buy high to sell higher. The only thing you need to ask yourself at this point, is my money better served being put into a coin that can give me a maximum return of 25%, or is it better used putting it into meme coins or even something smaller cap that will give me a much higher potential return for the same amount of risk taken? That is a question that you need to answer yourself, which, by the way, I do teach you how to go through this thought process inside the AOC Alpha group as part of the bull market training. But the principle remains the same, that in a bull market, as long as price continues to remain in an uptrend, and as long as price does not give you any indication that it's breaking its, bullish market structure to shift into bearish, you just keep buying high and selling it higher. This is how you operate as a trader, and this is how you get results that are 0.1% or even top 1%, but doing the complete opposite of, just understanding that crypto is truly an irrational market. It makes zero sense that, for example, that the top two meme coins right now are worth about $60 billion in market cap. Now, $60 billion, by the way, according to UN estimates, it takes about $30 billion a year to solve world hunger. The market cap that two dark coins commands is enough to feed the world for 2 years in a row. That makes zero sense, which is why you shouldn't try to understand it, right? A rational analysis of irrational processes is bound to fail. So you either raise your IQ somehow, some way and go into this side of the curve, or just turn off your brain and just buy high, sell higher, right? That's just basic bull market psychology that's going to help you out a ton to actually make money instead of being right about things, but having no profit to show for it. And the second thing that's just going to help your psychology out a lot is to actually have a system. Once you have a system, you can just switch your brain off, because there is exact entry criteria, there are exact step-by-step entry execution steps, there are exact exit criteria. You have your exit strategy planned out, you have your risk management strategy planned out, you have the exact list of coins that you need to look at all mapped out. Having systems just removes the need for you to think when you are trading, which helps immensely, because the less you need to think about, the less variables that's going to exist where it's going to confuse you, it's going to cause you to have doubt, it's going to cause you to get fearful, it's going to cause you to get greedy. When you have a system, all of these just disappear, which, if you want my step-by-step system that you can literally just copy and paste, AOC Alpha Group is the place to be. But let's say you're not interested in that and you simply want to learn more about trading psychology and how that plays into a bull market, because again, people say that trading is 80 to 90% psychology, and yet we spend 99% of our time doing anything outside but work on our psychology. And the reason is simple. Psychology is not one of those factors. Psychology is not one of those topics that is interesting for a YouTuber to talk about. Like, this video is probably not going to get many views at all, but is the knowledge that's shared in this video going to help you out way more than, say, a regular old video? Absolutely. But it's not in my favor to be producing videos like this. It's not going to get any views. Now, most YouTubers are marketers. They need their videos to get views. I am a marketer as well. Like, I admit it. Sure, I'm providing a lot of value here that is going to help you you guys make more money. But at the same time, I'm creating these videos to also market my product, which also exists to serve you, but just one level deeper with more coaching, with a more structured course. But anyways, back to what I was talking about before. If psychology is something that you want to work on, I'm actually about to host a trading psychology masterclass during either the first or second week of May. I will make the announcement to people that are subscribed to my newsletter, where I'm sharing alpha, trading tips, and just guides to help you guys make life-changing money this bull market. If you want to be notified on the psychology masterclass that you can join for a very, very low price, make sure you subscribe to the newsletter as well, where you will get a lot of value, just like you did in this video. But with that said, let's get back to the video for just a couple of minutes for me to talk about what I think the market's going to do next. First of all, it doesn't really matter what the market's going to do next. I have my trade set up already. I have my stop losses placed. It doesn't matter what the market does next. If it goes up, I make money. If it goes down, I get an opportunity to buy cheaper. But what I think the market's going to do next is probably go up. First of all, again, we are trading within this range. You just swept the range lows. It makes sense to sweep the range highs. And if you sweep the range highs, then it makes sense for you to make new all-time highs. And the fact that there are no significant economic events that lie ahead to potentially halt the growth of Bitcoin, then yeah, I think the bottom's in and the market's going to go up from here. Now, I could be wrong. Again, it doesn't matter whether I'm right or wrong. And all that matters is that I'm controlling my risk and I have free capital laying around to buy the dip if it goes lower. Personally, I don't think it's going to go much lower. But yeah, for now, I think the market's going to go up. And if you want help making more money this bull run, join the AOC Alpha group, and I'll see you in the next video. Trade safe and may the gains be with you, my friend.